Good morning, friends. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Thanks for everyone. Today's topic is an insight into managerial remuneration. After a long period, we are taking this long gap because MD remuneration, many things are clarified and quite liberal. Like earlier, it was a little controlled. Now, a lot of freedom is given, but still we thought that since long it has happened, we need to now take the topic this. And today's our panelist is CS Prem Narayan Tripathi. To formally introduce Mr. Prem Narayan Tripathi, he is a CS and IP and he is a seasoned governance and legal professional with 20 years of experience in corporate law, secretarial compliance, insolvency and advisory. Law management graduate, he is also IP. He has worked with leading groups like Torrent, Intas Pharma, and expert in secretarial legal compliance, corporate structuring, DD, investment agreement, regulatory matter, the FEMA and SEBI. In 2011, he started his practice and formed Span and Company Secretary LLP. He is also then registered as IP and advising on GIFT IFCC based entities for new aid setup and ongoing compliances. He is also co-founded Divine Governance Professional LLP, a GIFT IFC based firm dedicated providing legal compliance, secretarial and governance services to IFC entities and in its business expanding to IFC ecosystem. He is actively contributing to professional sharing. He is a regular speaker at ICSI, ICA, and various legal and professional topic and various other associations. Welcome, Mr. Prem Narayan. Thanks for your time. Today's presenter is Ms. Sakshi Gupta. Sakshi Gupta is an associate member of ICSI and Bachelor of Commerce and Law. She has worked with MCX earlier, has experience in the field of incorporation, LLP, and various secretarial matters, SEBI, LODR, and other exchange-related compliance and SEBI compliance. As usual, our moderator is Ms. Bala, who don't need any introduction. Mr. Sudhakar Sarwatullah is today, Saraswatullah, sorry, he should have been here. Saraswatullah is today joining late after say half an hour due to preoccupancy. And with this, I will request our panelists to say a few words, then Mr. Bala and then Sakshi, you can start. We can start our present Sakshi in another 7 minutes. Okay, thank you. Over to Mr. Prem Narayan. You are on mute, Mr. Prem Narayan, you are on mute.
Yeah, so thank you, ma'am. And good morning, ma'am, and Bala sir, Sakshi, and all the participants present here. So I'm truly delighted to be part of this learned panelist and where on this insightful webinar on the managerial remuneration, which is organized by Mehta and Mehta Training and Knowledge Foundation. So at the outset, I would like to thank to the team Mehta and Mehta for inviting me along with this panel to share my experience on the managerial remuneration and to attribute helping the answer to the queries of the participants. So managerial remuneration is a very, very significant topic from the corporate governance perspective, regulatory, as well as the professional journey, because it's like related directly with the promoters and the top management of the company, right? It's the money which is directly contributed in their pocket, right? So the question comes, especially in the cases where there are inadequacy of profit or the losses in the company. When the company is not able to contribute in the pocket of the promoters and the key managerial personnel, when the insufficiency of funds are there. So it's very critical for the professionals to the management also to determine the amount that has to be given in the form of remuneration and the various regulatory compliances, and also observing that it is from the many proxy advisory firms are there for the listed entities and to adhere to the LODR compliances also. Especially in the cases when there are the losses, now the law has also been amended by the MCA to accommodate the payment to the independent directors also. Earlier, they were like reluctant to join the board of the company, which are the trouble situation, the financial space, right? Because they were not able to make the payment to them because of regulatory constraints. So just by accommodating this by the MCA, the companies are able to make the payment to the independent directors also for the services which they are giving to the company as a director, as a members of the various committees, right? So the topic is very, very important because it has certain nuances respect to the applicability to various companies, various limits, various approvals, especially like from the banks and institutions when they are at certain defaults, and the approvals of the audit committee, NRC, and the shareholders wherever it is required, and many other things. So especially I would just like cite one important cases of a listed company, which is a very live case, which has been. So in that listed company, what was that the company was required to recast its financial statements for the last 5 years because of the NCLT order. Now, after the recasting of financial statements, the managerial remuneration which was paid was in excess to the amount which was required to be paid as per the limits prescribed under Section 197. Now, the interesting situation comes, especially to all the executive directors and MD to refund the excess money. Especially, there were certain directors who were technical directors, not having any day-to-day involvement in the financial aspect, corporate affairs of the company. Even they were forced to repay the excess remuneration paid to them. So think about the situation. The amount was in crores, which they would have already spent, right, because of the various nature of that, because money is earned, right, and they can use whatever is required, right. So these are the issues and very, very critical requirement from the professional's perspective to understand that what should be the actual amount which we have to pay, what approvals are required, whether whatever balance sheets we are preparing, is it actually the requirement with the various applicable standards, and there is no excess remuneration we are paying. So that has to be taken care, especially. So, so the good part is that even like for all the directors, there is no central government approval required right now. So this is the good part from the ministry angle, that it is made as a self-sustained and it like a self-approval process. Only the directors and only the senators are required to approve. So this is one of the good part, that the central government approval has been dispensed with from the corporate law and the SEBI law. Especially for the listed companies, there is some different carve-outs with regard to the payment of remuneration to managerial personnel, right? So I think the Sakshi Gupta will take care and she will present the entire presentation on the managerial remuneration. And whatever time that required, then I will give my inputs and my practical experience about that applicability and that clause itself, right? So I think I will then, without like giving more time on this, so I would request Sakshi to share the perspectives and the presentation on this. And then again thanks to the Mehta and Mehta for inviting me for this enriching session. And I wish all the participants a very great learning on this. So thank you all, and thanks once again.
Thank you. Thank you, Mr. Prem Narayan.
My pleasure.
Bala, and in 2 minutes, Sakshi will start the presentation.
Good morning to all of you. It is really a pleasure for me to be with you all, and I invite you on my own behalf and also on behalf of Mehta and Mehta for the knowledge sharing session. We as a company secretaries, we are required to actually always interpret the law. That is what we actually start learning it. So here, this particular managerial remuneration moves around only two sections, 197, 198, read with the Schedule 5. As our panelists said, the government is in the interest of doing ease of business. They have actually done away with the various approval which are required to go to olden days. We used to go to Shastri Bhavan. One of the qualification for taking up the company secretary job way back in 90s. Are you familiar with getting the managerial remuneration approval from the government? That used to be the case actually. Especially it is so when you want to appoint a foreign national as a managerial person. Then again, there are various conditions and government approval, without the government approval, all those procedures were actually involved. But today things have changed to the sea change from 1956 Act to 2039. But all said and done, one thing is very clear, why there is a managerial remuneration limit is there. The limit is there actually because they should not draw excessive remuneration. That is the whole idea. That is the purpose for which it is there. The next question is whether the managerial remuneration section, both the section 197, 198 is applicable for private companies. There are different views because private companies, people say it is only 197 is applicable relating to the appointment. But if people say, no, it's totally the managerial remuneration, they can pay any amount except other thing, all those things are out there. But if you read in between the line, there are specifically 2 or 3 sections which still applies to the private companies. I have come across in my life actually. So really speaking, the whole idea moves around. Ultimately, at the end of the day, the company should not actually pay excessive remuneration to the people. That is the whole idea about all this thing moved around. Although one side we talk about attracting the talent, managerial remuneration, paying incentive based, etc., and other things. Nevertheless, the compliances which are required with that, which is the prima facie, the compliance officers' responsibility to ensure timely compliance, absolute compliance, which is actually required to be there. A lot of integrity is there as you go along. We have our expert panelist, as he said very clearly, he will share his practical experience while going through it. I request to Sakshi take over this. Over to Sakshi.
Friends, Mr. Sudhakar will join little late.
Yes, Sakshi, visible. Perfect.
Good morning, everyone. So our today's topic for the session is insight into the managerial remuneration. As our panelist has already given a great introduction about our topic, so we'll start with our presentation. So the first thing we'll discuss and understand about what we are going to cover in our presentation and what is the applicability of the provisions of the managerial remuneration. So first we have to understand the type of companies on which the limits of the managerial remuneration are applicable. So as we have discussed and Balasar has also mentioned on the private limited companies, the limits as mentioned under section 197 are not applicable for the private limited companies. So they can pay their managerial personnel as per the as which has been approved by the board or the articles of the company. Then we come to the public limited companies or their subsidiaries, which are the deemed public limited companies. So the limits as mentioned under section 197 are applicable on these companies. So we'll go in the detail of these limits in the later stage of our presentation. And after that, if the company has adequate profits, then the section limits as mentioned under section 197, 5%, 10%, 1%, or 3%, as the case may be, would be applicable. And the calculation of net profit, how the net profit is calculated for ascertaining the percentages, would be given under section 198 that we will be discussing later. In case if the company does not have adequate profits, but the managerial remuneration has to be provided, then we have to go to Schedule 5, Part 2, wherein the limits have been provided on the basis of the capital of the company. If that public limited company is a listed company, then it has to comply with the Companies Act provisions, which we have discussed, Section 197, 198. Along with the same, they have to also comply with the SEBI LODR regulations, majorly Regulation 17, Sub-Regulation 6, which provides the cap for the payment or to the non-executive directors and executive directors both. Also Regulation 19, wherein the NRC becomes mandatory since all the remuneration has to be routed through NRC route. So before moving ahead, we have to understand who are the managerial personnel. So for the managerial personnel, there are three people who will be considered as a managerial personnel. One is the manager, whole-time director, and the managing director. So we will be discussing who are these people which has been described under Companies Act 2013. So under the section 2, subsection 53 of the Companies Act, manager has been defined as a person, as an individual who is subject to the superintendent's control and direction of the board of directors and has the management of the whole or substantially the whole of the affairs of the company. And manager also includes a director or any other person occupying the position as a manager or any other name the company gives it. So here the only main thing is the manager can be a director or a non-director person, both. Then we go to managing director.
Sakshi.
Yeah.
Sakshi, I would like to add on the last slide with regard to manager.
Yes.
So as Balasi will also agree that it's a very, very interesting position in the Companies Act, right? So started from 1956 Act to 58 to 2013 Act, right? So at the last sentence says that it includes any other person occupying the position of manager by whatever name called. So for example, suppose there is a CEO in a company, right, who has not been designated as a manager, but he has been given the substantially like all the affairs of the company, power to manage the entire affairs of the company, right? So because of the very nature of that delegation or that given the power of attorney or the power to manage the entire affairs of the company, right, he would be susceptible to be in the position of a manager. As CEO is a KMP but not a managerial person directly, but because of holding the very position, very nature of that substantially the entire affairs of the company, he or she may be considered as a manager. So it's very, very critical for the professionals like us. We should actually determine the actual power of like the SOP with regard to delegation of the power and substantial affairs. So as to comply with the compliance of the 196, 197 managerial cap also. Sakshi, just you may please.
Absolutely, you are actually correct. In fact, in some of the companies, what happens is all the companies do not have the whole-time director.
Yes,
Because what
sir.
happened, it is run by the non-whole-time directors. When they run to
True,
the
sir.
non-whole-time director, they don't want to have the whole-time director. They designate a person, whatever the name you say. You may be a chief executive officer or general manager or the overall the in charge, whatever you call it. That is the person who takes care of day-to-day affairs of the company. So all the practical purposes, he is actually a manager because he is having the overall control of the company. And in fact, he reports to the board of directors, though he is not part of the board as such, but still he comes under the category of the managerial person. But anyway, such companies are much less actually nowadays because it can happen only with the closely held unlisted public companies, etc., where group company they hold the investment functions, etc., and other things and all those things. Otherwise, generally we come across with a full-time director. Yeah.
Yes, sir.
Clarify further, even though the designation is manager, but the person is not having management or control of whole or substantially. See, again, it's not whole, even the substantially whole of the affairs of the company, then he will not be manager, just a department. Even though if he is holding the designation of manager, but the person should be subject to directors, superintendent's control and direction, hold management of whole or substantially all of that.
Dipti, you touched upon a very sensitive point actually here.
Yeah.
Although by designating a person as a manager or director, he does not become as a manager or director.
Very
In
true.
fact,
Presentation.
way back in 1980s or something like that, those days it was the Department of Company Affairs. That time, they have issued a circular, what you call misleading designations. There are companies, they used to designate the people as the director who are not actually the
Right.
board members. So because of that, people used to carry a misnomer. They are actually part of the board. They are actually occupying a position. In fact, the DCA has issued at the time a circular. Such designation should be avoided actually. You touched upon this point. By calling a name manager or director, he does not become manager or director. Yeah.
And this is generally trend in a foreign overseas company subsidiary or MNCs, which has that trend overseas, that they call them director of particular department and they call director or the manager. So that's why if that is the at least clarification is there, manager with the respective field where that person. Yeah.
Yes.
Then we have managing director. Section 2, subsection 54 of the Companies Act 2013 provides the definition of the managing director. Obviously, it includes a director. For being a managing director, person has to be a director of the company, who by virtue of the articles or an agreement with the company or a resolution passed in the general meeting or by the board, as the case may be, would be the managing director, and he has to be entrusted with the substantial powers of the management of the affairs of the company. And that would include the director occupying the position of MD by whatever name called. So here the explanation has also been given what would be included as what would not actually be included as the substantial powers of the management of the affairs of the company. So in case if any company has given power to any person in the organization to do the administrative work, which would be routine work, merely including of the affixing of the common seal of the company to any document or drawing or endorsing of any check on the account of the company in any bank. So those would not be included as the substantial powers of the management.
There are two questions I've already put up relating to this. What is the difference between the manager and the MD in the terms of the power? There is no difference because one thing is there, managing director is a director who actually form part of the board. He is a director by virtue of that. One of them selected as the managing director. Manager is not part of the board, but he is holding a substantial power like a managing director. That is what it is. The difference is only a director versus non-director. That is one thing. Second thing is, again, the question is put, what if the company is having appointed a MD other than an officer who's actually named CEO, but not on the board?
MD cannot be MD unless he's the director of. It's very definition stuff.
Yeah.
Correct. Same point what you have said actually, by whatever the name you call it, whether he is holding a substantial
Very
power
clear
or not.
only. So
Yeah.
it is like misrepresentation in that.
Correct. Yeah.
By law is not MD under the eyes of.
Yeah,
Yes,
that is
sir.
right.
I also agree with the same. Like he must be a director for the having like being a managing director. He must be a first director. In the manager, which is not the case, one may be a manager without having the position as a director.
Even
Yes.
if you go by the procedural aspect,
Yeah.
first of all, the person has to be a director. Once he
Yeah.
is appointed the director, then
Hmm.
only he is actually choose to be
Right.
appointed as a managing director. That is
And
what normally is there. Whenever we actually pass a board resolution, first appointment comes as a director per se. Then
yes.
only designating him as the managing director. Yeah.
Yes. And just sir, one add to just one more point with regard to this. Sir, actually, sir, there is one very thin difference with regard to managing directors' power and managers. So in manager, the law says that he has the substantial power of substantially whole of the affairs of the company. Wherein in the case of MD, it's a substantial power of management. So that's practically in the company, there may be two MD, there may be three MDs. But however, in practically in company, only there will be one manager. Because there's a definition says like 253 says that the substantially whole of the affairs of the company. However, which is not the case for the MD, says substantial power of management. So there may be two MDs also, that is fine. So that is sir, one more the difference with regard to managing director and manager.
Mr. Bala, there is first question from Mr. Saurabh also in the very similar line, if you would like to.
First question.
In case of unlisted public companies,
Yeah. In case of the unlisted public company, company appoints the individual as director, but not designate as MD, WTD or manager. Will section 197 limit be applicable for such individual?
as it's very clearly mentioned, the designation doesn't count. So if he has substantially satisfy the definition of manager, he will be counted as manager.
Ma'am, just can I add on this? So,
Yeah.
ma'am, there is a definition of executive director under the
Yeah,
company.
I was supposed to tell that. Let it come that ahead.
Specification of definition. It says that executive directors means a whole-time director of the company.
Right.
So if you are designating someone as executive director and you're not referring to 196, 197, I think that not be the full compliance of the Companies Act,
Right.
and that this may have the chances of violation. So we should, there is a limit of 197 will definitely apply.
Yeah. And
Because the
again,
substantial, yes.
yeah, sorry, please go ahead.
Somebody has put up a question. Here, really speaking, if you actually see the first question, which is actually visible, he says, who's the ordinary director? And then the company is how is distinguished between the ordinary director and executive director? I don't think there is anything called the ordinary director at all. There is only a director. Within the director, whether it is the executive director, non-executive director, again within the non-executive, there is an independent director and non-independent director. And again, of course, woman director, nominee director, those things, there is nothing called the ordinary director or something like that. I do not know what is the participant understand ordinary director here. How is the ordinary director remuneration? See, one thing is that that's what Sakshi is discussing first. He has to complete the next slide, then you'll understand. He's talking about who are the manager, who are the people. He's selling the category overall coming that. You wait for that so that you'll know.
Yeah, I think the question will take last so that he understand everything. Yeah.
Correct. Yeah. Yes, go ahead, Sakshi.
Then who is a whole-time director? As section 294 of 2 subsection 94 of the Companies Act 2013 provides, the whole-time director includes any director in the whole-time employment of the company, which will include the executive directors as well.
This to be noted, it's inclusive definition. So the person in whole-time employment of the company is surely whole-time director, but other than that can also be whole-time director who devote time.
Then we will also be, since we are discussing managerial remuneration, the remuneration has been defined in the Companies Act 2013 as any money or its equivalent given or passed to any person for the services rendered by him, and includes perquisites as defined in the Income Tax Act 1961 in the whole-time employment of the company. So the any money or its equivalent thing has been given to any person for the services during the employment of the company would be included as the remuneration. Then we'll go to section 196, wherein the
remuneration, just the remuneration Sakshi. So it's very wide actually. Can you go through on that? So even though it refers that like whatever the parts of that remuneration, like for example, money equivalent given to them, includes the purse as given to the in the whole-time employment of the company. But this remuneration means any money which is given to any director. For example, even ID also the same definition would apply. For NED also the same definition would apply, right? So this remuneration is very vast and very exhaustive. So it includes anything. Whatever you've given to the other person or a managerial person or director would include a remuneration. Yes, please. Next.
And very crucial word is past. So even if it is not given, but indirectly it is received,
Yes, yes, ma'am.
That will be counted in the remuneration.
Yes, yes, yes.
So now we'll be discussing Section 196 of the Companies Act, wherein the appointment of MD, whole-time director, or a manager. Now we'll be referring them as a managerial personnel. Those provisions for the same has been given. So a company cannot appoint both MD and a manager simultaneously, which has been clearly mentioned over here. So company either can appoint a MD or a manager. And in case of the appointment or the reappointment of the managerial personnel, so the appointment should be for the maximum one term of the 5 years, and he can also be reappointed. However, the reappointment cannot be done earlier than 1 year before the expiry of their term. Also, there are certain conditions which needs to be followed for appointment of the managerial personnel. First is the age criteria, wherein a person should not be less than 21 years of age and more than 70 years of age. In case any person is more than 70 years of age or will be crossing the age of 70 years during their term, which has been already decided, then a special resolution specifying the justification for appointment of that person has to be passed by the company. There is also one relaxation which has been given to the companies, that in case a special resolution has not been passed, however, it got favorable votes, then the central government can approve the appointment if it deems beneficial. Also, an individual who has been appointed as a managerial personnel, they should not be insolvent, and they should not have suspended any payments to the creditors or made any arrangements with them, or they should not have been convicted with crime with a sentence of exceeding 6 months. The appointments of the terms of the managerial personnel should be approved by the board and by in the general meeting by the shareholders, and in case central government as well, as the case may be. The return of the appointment must be filed with this in the form MR1 within 60 days with the registrar, along with the form DIR 12 and MGT 14, as the case may be. So if also in case it happens that the company disapproves the appointment at a later stage, any action which has been taken by that person who has been appointed as a managerial personnel will remain valid. So their disapproval or their appointment gets cancelled, their decision which has been taken earlier would not go invalid. Now we will be discussing on Section 197, which provides on the limits of the managerial remuneration. So this particular section provides 4 different types of limits. First is the overall limit, which is the total remuneration to the managerial personnel should not exceed 11% of the net profits of the company. The net profits are calculated as per Section 198. So we will be discussing that later. In any situation, if the total remuneration which has been provided to the managerial personnel which exceeds 11%, then the shareholders' approval through an ordinary resolution is required to be taken by the company, and the payment is subject to the Schedule 5th. Now this is the overall limits. However, in case the company has the executive directors and the non-executive directors, then there are different limits provided for the same. In case the company has executive directors, which includes the managerial personnel, as we have discussed, MD, WTD, or the manager. In case company has only one of these person, one managerial personnel, then they can provide the remuneration up to 5% of the net profits of the company. However, in case there are more than one managerial personnel in the company, then the total remuneration to those managerial personnel shall not exceed 10% of the net profits of the company together. I mean, it's not like for the one managerial personnel, it's for the all of them together. It should not exceed 10% of the net profits of the company. Then
somebody has put up a question.
Yes,
Even
sir.
if a private company have no limit under the remunerator, so any amount for that reason can be offered, like there anything deemed written for that. Yeah, as per the private company is actually concerned, the limits are not applicable actually. So they can actually pay whatever they feel, what the board decide, or as per the article of association. That is really clear. That is what our panelists also said earlier. Second question somebody is putting for a managing director person, whether he should be appointed as a director or he should be appointed as an additional director. You have to understand that director is always appointed only by the shareholders of the company. The additional director is actually a provision which is actually given In between, if you want to fill up the vacancy, casual vacancy, anything, etc., another thing, the board has given authority to appoint a director who will be deemed to be an additional director when he is appointed, but he is having a limited period of holding the office till the annual general meeting. At the annual general meeting, that is immediately preceding the annual general meeting, either he has to get elected by the shareholders, or if he doesn't get elected, he has to vacate office. That is very clear on this. There is no question of this. When we say director, because generally the shareholders appoint the director. That is the reason why we are saying that.
No, even additional director is director, but that is clarified as that he is appointed by board and needs still the approval of shareholders.
Correct. That is right.
That's
That
right.
yeah, that is right.
Sir, I would like to add with regard to the payment of remuneration to the private companies, right? Managerial person.
Yeah. Yeah.
So, though there is no cap with regard to the 11%, and like because it is mentioned in 197 about the public companies, but however, there is section 166 in the Companies Act which says about the duties of directors. So, duties of directors amongst others includes that they will act in the best interest of the company. They will not take any undue advantage, benefits, etc. So, for example, there are only two directors, there are only two senators. They cannot take entire money in the form of a remuneration, right? So, it should be reasonable, as simple as it, right? So, the 166 duties itself, though is subjective and in general, but it is very, very specific duty assigned to the directors and collectively to the board that they will not decide anything which is not in the interest of the company. So then, by when there is, even though there is no limit, when they were finalizing, determining some terms with regard to remuneration, it should be reasonable and as per the industry standards.
Now, the limits we have discussed were for the executive directors. Now, in case of the non-executive directors, there is only one MD. Then the non-executive directors should get not more than 1% of the net profits of the company as a remuneration. In any other case, then they can get up to 3% of the net profits of the company. In case the company is a defaulting company, then the prior approval of the banks, PFIs, or NCT holders or the secured creditors has to be taken by the company. And in case the profits are inadequate, then the company has to pay the managerial remuneration as per the details provided under Schedule 5th of the Act. And this remuneration does not include the director's fees, which is the sitting fees. Also, in case any director has provided any professional service, then this director remuneration would not be inclusive of that professional fees in that.
There is somebody put up a question. Can a company appoint all the directors as a non-executive directors only? This causes concern for investigating agencies, and they think it means that all can be treated as the executive directors.
Sir,
Answer, Bala?
Yeah.
Yeah.
Good morning to you.
Hi, good morning, everyone. Good morning, everyone.
Yeah.
I'm sorry. In fact, I was on another webinar. I just finished that and I joined here.
Yeah.
So, Bala, to answer your question, not necessarily a board has to have an executive director. If you see the 203, it says that you can have a CEO, and CEO need not be on the board. So, a board can comprise all non-executive directors, but a CEO is there who will be heading the management, who will be taking care of that.
Yes, Sudhakar, that has been actually discussed. Either the manager or CEO, another thing we talked about it. Here this person is talking. If all the people are non-executive director, he says he's caused concern with the investigation, they can be treated as the executive director.
Okay.
I really don't get to know what exactly in the mind of the person, but one thing is there. By the general rule, if no one is actually designated responsible for this, all the directors are responsible in totality for whatever the things are there. That is what the general rule is there. The investigating agencies and other things, they think, I don't know what is in his mind actually.
Yeah,
I'm not
facts
able
of
to.
the case. Basically, who will be the responsible for default?
Yeah.
I think that way he is asking.
Okay.
Let him put a clarification.
See
Yeah.
one thing, Bala, whether a
Yeah.
managing director is there or not there, if something goes wrong, it is the collective responsibility of the board, right? That is number one. Number two is, of course, if the MD in particular, if he has done something, that is a different thing altogether. So here also what happens is, if something goes wrong, business point of view, CEO will be held responsible, that internally. But as far as the externally, the regulator is concerned, he will definitely take the case of the CEO also. It is not like that the MCA is not having a jurisdiction on the CEO. He is definitely CEO is a KMP, right? At the same point of time, as far as the board is concerned, collectively they are responsible for any wrong thing happened in the company. Whether managing director is there or not there, it is immaterial.
If a public company pays the remuneration to a director without designating him as a whole-time director or MD, is it complete with the provisions of the Act? Is it section 196, 197 is attracted?
You have mentioned, no, that public company, what are the section applicable if listed, unlisted? In the slide presentation. Yeah, we'll, you're taking question or you can go ahead.
No, we will go ahead. We'll go ahead.
Yeah.
Yesterday I told you about 197 that 3 sections are applicable to. Have you discussed that or not yet?
No, not yet. You can discuss actually.
Yeah,
not yet.
there is a question also on clarification, 1%, 3%. Or Sudhakar, you want to finish this 197 and this slide?
Yeah. So
yeah?
Sudhakar, you can better do that. That will give a better clarification.
After 1 or 2 slides.
Yeah, sure.
Yeah. Sakshi, go ahead.
So all the managerial personnel or the director should be paid as per the limits. In case if any of the director has been paid excess than the limits, then the excess remuneration must be refunded within 2 years by that particular director. Unless the company waives off the same by the special resolution. Also, the directors are allowed to receive commissions from the holding or the subsidiary company, but their same should be disclosed in the board report of the company. Also in the normal situations that the company pays the insurance premiums on the behalf of the director, company takes the insurance for the directors. So those insurance premiums are not part of the remuneration of the directors. However, in any situation, the director is found guilty of the negligence or the breach of the duty, that insurance premium which was paid by the company on the behalf of that particular director becomes the part of their remuneration. Also, if any of the director is being contravening with the provisions of this particular section, then they can be fined between 1 lakh to and 5 lakh rupees. Also, the the auditors are required to confirm in their report that director remuneration has been paid as per the provisions of this act, and in case any excess remuneration has been paid, that same shall be reported by the auditors in their report. So we have already, I think this was covered earlier, that relating to the commissions and the auditor's statement in their report. So sir, now you want to discuss that point? Because we'll be moving to 198.
See, in the Companies Act 2013, if you see that at some places it said the public company, and some places it said the private company, and some places it has used the word the company. Wherever it is used the company means it is public as well as private. All the things it is applicable. So one has to be very careful whenever you are reading the sections. If it is used specifically for a private limited company or for a public company, then only it is applicable or not applicable. But whenever it says that the company, it means it is applicable to all companies. If you see 197, there are 3 subsections are there where they have used the word public limited company. Subsection 1, 2 and 12. 1 and 2 talks about the percentages of remuneration, and 12 talks about the median remuneration, which is to be disclosed in the annual report. All the remaining subsections.
Sakshi, bring that slide, no, so that audience can see that 1 to what Sudhakar is speaking, no? 197, Sudhakar said, no, 197, 1, 2 and 12.
So you have to bring the Companies Act basically, not necessarily.
Okay.
You have to talk. I'm talking about 197 as a whole. There are 2 school of thought is there. See, if you see subsection 1, subsection 2 and subsection 12, they have used the word public limited company. All the remaining sections, they have used the word the company. So there are 2 schools of thought is there, and one I belongs to the first one, wherein we said that only the limited, that as far as the percentages are concerned, managerial remuneration, it is applicable to a public company. Private company can go and give whatever their balance sheet permits it. Okay, it is up to their discretion, whatever the remuneration they have to give to their managerial persons. Subsection 12 talks about the median remuneration, which is to be disclosed in the annual report. That is also applicable to public limited companies. Rest of the subsections, they use the word the company. That means those subsections are applicable to private companies also. But some people say, no, 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 it is not like that. 197 is not applicable to private companies at all. So my request and submission to the participants is please go through that very carefully whenever you are complying it. As of now, regulator has not given any clarification on this particular point. But if you read the word, the Companies Act, the way you are reading other sections, you have to read 197 also. Don't be biased in reading that.
True, this I will also agree with the Sudhakar sir. As rightly pointed out, because the subsection 3 of 197 says that notwithstanding anything contained in subsection 1 and 2, but subject to provisions of Schedule 5, if a company has no profits. So it starts with the company, and that puts the dilemma with regard to this. And I agree that there are definitely two schools of thoughts, right? So it only depends at what is your how you are actually advising to your clients, whether it's a conservative or aggressive, right? But definitely there are two different views on this. So yes, there are various views with regard to that who are supporting this. Only the entire section is applicable to only public companies or subsidiary of public companies. And other schools of thought say that yes, only accepting that couple of subsections. Others are there. In case of inadequacy of profit, you cannot give whatever amount you want, right? There is certain limits under Schedule 5 also. Yes, yes, Sudhakar. It's very, very rightly pointed out point in this regard.
Thank you. Thank you very much. See, further, one more thing I would like to say is that in case of a private company, you have to suppose pass shareholders resolution or board resolution. It is the easiest thing for us to do. Instead of getting into all these rigmaroles, interpretations, and all those things, wherever it is beneficial, have a conservative interpretation. In fact, when I was working with Reliance, initial days, when the Companies Act 2013 came into force, there were a lot of issues were there like this. People say something, other people say something else, and all. So what we have taken a decision is we will interpret the act conservatively because of the penal provisions are very harsh. And especially that if you see the way these adjudication orders are coming every week, at least 2 articles coming from Bala sir. And if you see that, even private companies for minuscule non-compliances, which we never thought in our wildest dreams that this kind of penal provisions will be imposed. So better wherever you have to interpret it, interpret conservatively. Wherever there is a benefit of doubt is there, don't take the benefit. And then ensure compliance. This is what my advice to all the participants. Never take any kind of that once somebody says like this, somebody says similarly. One more thing also, recently somebody was talking to me. He is about something. I gave an advice. He said that no, I don't agree with you. I have a legal opinion. That is apparently it is wrong on the face of it itself. I don't know who has given that lawyer, company secretary, chartered accountant. I don't know. But please remember that legal opinion can give you a comfort, but it will not insulate you completely. Legal opinion is the opinion of a person according to his understanding of the law. He is giving you the opinion. If you substantiate with case laws and all, elaborately explaining it, and you are able to understand that, then it is a different thing. But several times people give legal opinions without substantiating with the legal provisions or case laws. So it is up to you how you are going to act upon that kind of legal opinions. So don't think that legal opinion will give you the insulation completely.
Sudhakar, absolutely, you're right, actually. In fact, in one of the situations in the listed company where I was working, that particular year, we had an inadequacy of the profits. It is not the loss-making company. The situation is inadequacy of the profit to make the remuneration. The question actually comes, it has got two parts. One is actually the executive director remuneration. Second is actually a non-executive director, that 1%, whatever name you call it, normally people call it commission. Question is whether this 1% commission can be paid on the whatever the profit is earned by the company, and we calculate within the limit for the executive director. People heavily came back, including the statutory auditor. Sorry, in case of the inadequacy of the profit, you cannot pay 1% commission at all. That is the thing. Somebody has given a legal opinion also. I said, no, it is not correct. We can still pay. That is what I said. Ultimately, as you really said, those days, I'm talking way back in 90s. We said, okay, let us do one thing. Let us set to right all this thing. We will take a really opinion from the MCA. We will go to them. That is what we said actually. We officially wrote a letter to them. When officially we wrote the letter to them, initial response was there, no, this doesn't come under our purview, this, that, etc. and other thing and all, which actually came. Then I made a personal visit to Shastri Bhavan, I met the people. Then there were company secretaries working. When we discussed with them, then they agreed whatever I said is correct. We got an official letter. Yes, you can pay the 1% commission with the whatever the profit actually worked out. That is why it came. Ultimately, we have paid it. So as you rightly said, this is an opinion given is how he interpreted the law. He gives an opinion. You have to examine thoroughly and you have to take a decision on that.
Sir, just
Yes,
to add
sir.
on, just to add on with regard to like 196, sir, actually why the issue happens more with regard to these two opinions. Because section 196, there is a MC exemption in 2015, right? June 2015, which exempts the subsection 4 and 5 to the private companies. And section 4 tells about the approval of the terms and conditions, including remuneration under section 197, schedule 5. I think once it is exempted, so again, it has become more prevalent that what to take, whether to consider 197 or not. So there's become more of that in the practical challenges, right? Had it been there, so they would not no issue, but because it has been specifically excluded from the purview of that private companies, so it has become more complicated. Yes, 186. Yes, Sakshi, you may please go ahead.
So now we will move to section 198, wherein the calculations has been provided for the net profits of the company. So it has been classified into four parts. One is the credit and the non-credit of the items in the profits. The other two is the deductions which are allowed and deductions which are not allowed. So first we will be discussing about the credit and the non-credit of the items in the for calculating the net profits for managerial remuneration, which could be different from the normal net profit of the company as well. So any bounties or the subsidies which has been received from the government or the public authorities by the company would be included for the credit of the items in the profit of the company, unless it has been directed otherwise by the central government. Otherwise, all the bounties or the subsidies would be a credit item for the profits. There are certain items which will be as the non-credit items for the calculation of the net profit, which if we see the list, it is basically it is something which is any income which is not a regular income of the company. For example, if there is any profits from the share or the debenture premium, if in case the company is an investment company, then it would be a credit item because it would be their regular income. We are talking about a company which is not an investment company, then the share, any profits from the share or debenture premium would not be credited. Then any profits which has been received from the sale of the forfeited shares, or any profits received from the sale of the immovable property or the capital assets, any undertaking or the company's undertaking or a part of it has been sold, any capital profits coming out of the same, or in case if there is any unrealized or the notional gains from the revaluation of the assets, it would not be credited in the profit. Certain deductions which cannot be taken by the company for calculating the net profits under section 198. So the deductions which are allowed for computing the net profits would be the normal working charges, any director's remuneration, bonus or the commission which has been paid to the staff or engineers or technicians, whosoever, any taxes on excess or abnormal profits as notified by the government, any business tax profits imposed for the special circumstances, any interest on the debentures, mortgages, secured loans or unsecured loans, repair expenses. So the normal, these are all not the very normal kind of expenditures which happens. So these are the normal expenditures which happens. So deductions for the same would be allowed. Any depreciation or the outgoing contributions under section 188, compensation or the damages paid due to legal liability, all these things happens in the normal course of the business. So these deductions would be allowed by the company for calculating the net profit.
Sakshi, to summarize in 2 lines, whether it is the income or expenditure, both in the normal course of conducting the business, what is incurred by the company, that is actually permissible. Whatever abnormal things, both the sides, either income or expenditure, that has to be specifically looked into, that will not be allowed. In fact, a very long time back, when a lot of companies, they started selling their, the real estate properties and other things and all those things, which was not in the normal course of business. The company is not doing the selling of the real estate properties. So what they have done actually, in order to give the benefit to the shareholders, because divisible profit while calculating it, what they have done is they have declared the dividend, that is normally in the course of the business. Then they have declared a special dividend arising out of this income. If you see way back when this, especially the various textile mills, etc., and all, they closed down left and right. You can see those balance sheet. It was actually there. I think Sudhakar will agree on this also. There are many companies that have been doing that.
Yes, sir. Sir, I agree with you, Bala sir. So with regard to this 198 calculation, so what the law says that managerial persons must not be rewarded for the profits which is not attributable to their own services. For example, non-operating income like sale of assets, sale of inbound properties. So they should be paid the remuneration only on the basis of the operating profit or the operational incomes, right? I think that's the reason there are specific deductions for this type of incomes.
Yes,
Yes.
Sakshi, go ahead.
So the items which are not allowed to be deducted from the net profits while computing the same is the income tax, super tax, or any other taxes on the company's income, except which are excess or abnormal profits. Then voluntary payments such as the compensation or the damages, unless they are legally required. Any capital losses, including those from the sale of the company's undertaking or the assets, or any changes in the carrying amount of assets or liability, including revaluations recognized in equity reserves. So these kind of items would not be allowed to be deducted while computing the net profits of the company. Then we'll be moving to Schedule 5.
Just 1 minute, Sakshi. Please go to the previous slide, complete that 198. See, as a matter of caution, this section 198, how we are calculating the profits, there are two sections, which depends upon this 198. One is section 135, corporate social responsibility, the 2% expenditure when you are working, 2% of your average profits. Those profits are to be arrived at under section 198. Second thing is the managerial remuneration. So here, once if that finance department is computing it, then it is to be checked and authenticated by the secretarial department and vice versa. Both the departments have to come to an understanding on this. At the same point of time, it is also advisable to cross-check with the statutory as well as secretarial auditors also. Because once the company is arriving at tomorrow, if the auditor is not agreeing with that, necessarily it will lead to a complication. So better also get that authenticated by secretarial as well as statutory auditors at the same point of time. So all of them are on the same page. So this is as a matter of caution, you can do that.
Absolutely, you are actually right. It is definitely required to be verified by the statutory auditor. Because very recently I came across the particular case. It is the divisible profit which is distributed by the interim dividend. The managerial people have calculated and they have paid out the interim dividend. Ultimately, when they actually cross-check the statutory auditor, it seems to be mistakenly they have actually misconsidered the tax provisions. With the result, excessive interim dividend has been declared and distributed. With the result, the company and the director were penalized because of this, although they claimed, inadvertently, without any intention, this, that, etc., and other thing and all. They said, sorry, it is not correct because you should go by the right financial. So, as you rightly say, yes, it is always to be cross-checked. The right financial is to be taken care of it. Yeah. Yes, Sakshi.
So now we'll be discussing about the Schedule 5th of the Act. So Schedule 5th has been divided into 4 parts. First is with respect to the appointments of the managerial personnel, which has been interlinked with Section 196, as we have already discussed. So there are certain other conditions which has been provided in Schedule 5th with respect to the appointment of the managerial personnel. So if any appointee has been, which has been proposed for the appointment as a managerial personnel, he or she should not be convicted of any offense under various laws which has been provided with the list of the laws under Schedule 5th, such as Indian Stamp Act, Companies Act, Income Tax Act, Prevention of Money Laundering, or he or she should not have had been convicted for rupees, I guess, the fine of rupees 1,000 under these acts, and any individual he must not have been detained under the Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. If any of these is there, he would be ineligible to be appointed as a managerial personnel of the company. And we have already discussed about the age criteria. The person should not be lower than 21 years of age, and she should not be elder than 70 years as well. But there is an exception for if any person is more than 70 years in the age. Then the other requirement is that person who has been appointed as a managerial personnel should be the resident of India. However, if the companies are there in special economic zones, then there is an exception to this as well. Non-resident Indians can also be appointed as a managerial personals in the companies in special economic zones. However, those people or the NRIs should have a proper employment visas, and they should meet the specific requirements like details of, they should be able to provide the details of their appointment and employer when they're applying for the visas.
So here I would like to add on with regard to this Sakshi. So the very important point here is that with regard to appointments. First is that conviction and fine of rupees 1,000 or more, right? So there are a list of laws including the GST, IBC and many other provisions, right? So it's very interesting to know that whenever we are appointing a person as an MD, whole-time director, a major person, right? We must obtain a declaration from him that he has not been convicted of certain offenses and has never been fined of rupees 1,000 or more, right? Because the amount is very minuscule, right? Considering the nature of that duties, etc. So the chances would be more. So we have to very absolutely clear with regard to that from the declaration. Second is that with regard to residential status, right? So the SAGE is excluded. So just for example, the entities who are in GIFT IFSC, right? GIFT SAGE area, right? So many entities, financial services entities are coming. So they are going to appoint someone as a whole-time director as a major capacity. So they will have this type of relaxation subject to the meeting the terms and conditions. But however, this is a good relaxation for the sales and especially gift person, right? So these two things we have to keep in mind when we are appointing managerial person. Yes, actually, yes, please.
Then the part second of the schedule 5th is the
Sakshi, as far as the non-resident is actually concerned,
yes, sir.
there is a provision is there. If the person lived in India not less than 1 year, the foreign residents, if he lived at least 1 year in India, for the limited purpose of this particular section, he will be actually treated as a resident Indian. So that means normally what many companies they do is they bring a person, he has been appointed some sort of a non-managerial category, some technical person or advisory, etc. for about a year, and later on they actually appoint him as a managerial person. That is what people do. Actually, we used to do also in the earlier days. That is one thing which is available here. Yeah. Go ahead, Sanjay.
Interestingly, this is different than the 149 subsection 3 which says about the every company must have at least one person resident in India, right? So the resident the status and the criteria of both the sections are different. Yes, Sakshi, yes, please.
So the part 2 of the schedule 5th is the relating to the remuneration, which has been interlinked with section 197. As we have discussed, in case the company does not have adequate profits or is not able to pay as per the net profits, then the company has to refer to the limits which has been provided under schedule 5th. So in case the company is having enough profits, then the limits has been given under section 197 are applicable, and then can provide the managerial remuneration as per those limits, whatever 5%, 10%, 1% or 3%, overall to the 11%. There are special circumstances in case the company wants to pay or has paid excess remuneration. They are allowed in only in these conditions if the company they have to pay as per schedule 5th. Then the conditions are if another company pays excess remuneration to the directors, any newly incorporated companies or the SIC companies, and the companies under a resolution plan approved by the NCLT, then they can provide the excess remuneration to the directors. Or the benefits like provident fund contributions, gratuity, and leave encashments, these are excluded from the remuneration ceiling. These are the over and above the remuneration. These are considered as the perquisites.
Normally, what happens is whenever you bring a foreign national, you specifically enter into a contract with them that the company will pay so much remuneration to you, and you are actually appointed for a period of so many years. Because of the circumstances, etc., and all this, the company is not able to meet inadequacy of the profit situation. In such a case, then the question comes, how do you actually pay to him? That is the whole idea. So what happens is normally, by and large, companies they used to do in such of the inadequacy of the profit or loss-making situation, etc., and all this remuneration will be treated as a minimum remuneration for the purposes they put it. But nevertheless, it will actually used to call the government approval, and we used to get the approval. But once we go for the approval, whether you actually have a contract with them, this is what it is as a minimum remuneration. That used to be the case actually. Yeah. Yes, Sakshi.
So a person can, as we have discussed, a managerial personnel can draw remuneration from the two companies. However, these companies should be holding in subsidiaries, as we have discussed. So the limit has been provided over here that the total of the remuneration should not exceed the maximum limits allowed for either of the companies. And the additional requirement for the remuneration is that it requires necessary approvals from the board, or if there is an NRC committee in the company, then it has to be routed through NRC committee to the board and then the shareholders. And disclosures about the remuneration is mandatory in the corporate governance report. Now, in case the company does not have any profits, or in profits are there but they are inadequate for giving the remuneration, then the company should be providing the managerial remuneration as per the limits given over here. In case the company has a capital which is less than 5 crore rupees, then uh, so in case of a managerial personnel, the limit of the yearly remuneration would be maximum up to 60 lakhs, and the yearly remuneration which is payable to any other director who is not a managerial personnel, then it cannot exceed 12 lakh rupees in a year. Similarly, if the capital of the company is between 5 crores and less than 100 crores, then to the managerial personnel, the maximum can be paid up to 84 lakhs in a year. And for to other persons, other directors specifically, then a managerial personnel, then the maximum amount can be paid is 17 lakhs in a year. If the company has a capital of more than 100 crores but less than 250 crores, then for the managerial personnel, 120 lakhs can be given as a yearly remuneration, and for the other than managerial personnel, then the limit is provided as 24 lakhs to be paid as a remuneration in a year. In case the company has a capital of more than 250 crores, then the limit is for the managerial personnel is 120 lakhs plus 0.01% of the effective capital in excess of rupees 250 crores. And for the other directors, other than managerial personnel, the yearly limit is 24 lakhs plus 0.01% of the effective capital in excess of rupees 250 crores.
In fact, if you see the schedule 5, the part what had happened is that apart from managerial personnel to whom the limited, I mean, in case of no or inadequate profits are there, this was not there for other directors earlier. Because of that, in case of independent director, this has become a great impediment. Because for independent directors, you cannot give them stock options. You can give them at the most sitting fees, profit linked commission, and reimbursement of expenses. So when there is no profit, you are not able to compensate the independent director at all. So with that, companies were not able to attract and retain the talent of good independent directors. So Amendment Act 2020, if I am not wrong, this has brought this change, and it said that even other directors also can be paid minimum remuneration. So especially independent directors, you can compensate them to some extent, because of these limits, which are quite. Also. Second thing is that please take a caution again. These limits are linked to the effective capital, not the capital of the company. So effective capital is defined in the Schedule 5 itself. So please be clear about that effective capital and your capital may not be the same. It will be differently different. And another good part, if you compare with the Companies Act 1956 to Companies Act 2013, is under the old act, you have to have the approval of central government beyond the limits, which fortunately completely removed that. Now, you for the managerial remuneration, you don't need the government approval at all. Just go back to your shareholders, whatever the shareholders approve it, you can do that thing. This is a great thing. In fact, in the good olden days, the efficiency of a company secretary depends upon that whether he can get whether he got the managerial remuneration approved by central government. In fact, in my days, whenever I go for any interview, the questions are: Have you done share transfer or related work that forms that schedule that earlier is to Form 7B? At the same point of time, have you got the managerial remuneration approved? So many things like this. So fortunately, this act has given great liberty to the professionals. You don't need to go to central government again and again for all these things. Because they have correctly realized that how the central government got the ability to arrive at the remuneration of a managerial person, what idea they have. In fact, several forums I have mentioned this. I would like to say here also by taking 2 more minutes. is that in my first employment, where that there was an expat was there, and now he has been appointed as managing director, and the remuneration proposal was 3,200 rupees. This I'm talking about 1986. 3,200 rupees is the managerial remuneration. And we have applied to Shastri Bhavan because that is going beyond the limits. And also went to the Shastri Bhavan. We have been called for an interview. That Japanese director along with the interpreter and myself, we went there. And ultimately what they did was, after explaining so many things and all the expertise of the person, the knowledge of the person, the experience of the person, that concerned that officer has approved only 2,800 rupees per month was the salary. So from where to where we have traveled today, really it is that I mean, the way even the regulator also thought that everything, corporates need not come to us. Let them go to the shareholders and do whatever they want. In
Yes.
case of private companies also, that there was a question also in the chat box, I have seen that. Till the time you have a good amount of profits, do whatever you want. If you don't have profits and inadequate profits, obviously you have to come back to this.
Yes.
It is always when you don't have profit, from where you will pay. That is what you have to see. Anyway, 197, 1 and 2 are not applicable to the private companies. That is definitely there.
So, sir, I agree
Yes.
with you. Like, with regard to this exemption, like from the central government requirement approval, right? So, this has been dispensed with. It is very, very important from the corporate affairs perspective, as because only the shareholders and directors they have to approve, right? And especially, moreover, when the for IDs, like there was no because in the distress time, when the company is not having the proper profits, right? Then there were actually the need of that. Those type of directors were very, very important. The active participation, more watchdog on the affairs of the company, right? So people were reluctant to join the boards of this company as their IDs, right? So having this relaxation in 2020 from that and payment of certain remuneration to this IDs is very, very important steps. And third, with regard to, sir, as you rightly mentioned about the Schedule 5 and when in the case of losses for the private companies, there is section 166 with the duties of the directors, right? Which very specifically says that the directors has to act in the best interest of the company. So in those situations, they have to take a very, very conscious call with regard to the payment of certain amount, only some reasonable amount. So only then they can act in the best interest of the company. Yes, sir. Yes, Sakshi. Yes, please.
Sudhakar, I liked one thing, what you said actually. In those days, one of the added qualification for the company secretary was, are you able to get the managerial remuneration approved from the Shastri Bhavan? Have you got experience on that? Yes, Sakshi.
So the part 3 of Schedule 5 provides for with respect to the appointment and the remuneration of the managerial personnel in the part 1 and part 2 respectively. This must be approved by the resolution of the shareholders in the general meeting, and the company's auditor or the company secretary, either practicing, if company secretary has not been appointed in the company, then a whole-time practicing company secretary must certify that the company has complied with the requirements of this schedule. And this certificate must be included in the return which has been filed with the registrar under section 196 subsection 4. Also, under the part 4, the authority has been given to central government to exempt specific class or categories of the companies from the requirement of the schedule through a notification.
Sakshi, as you rightly said, there are three things arises in this particular case. One is a profit-making company. Because it does not arise in the profit-making company. Okay, you talked about limits, not limits, and other things and all. The second situation is actually inadequacy of the profit. These companies are still making a profit, but is inadequate to meet the requirement. The third situation is altogether comes a loss-making company. So these are the three different situations. So you know to apply the rules accordingly, depending upon where you actually fall. How do you actually compute along with the Schedule 5? That's what it comes out. Yeah.
Now we'll be discussing about the additional requirements for the listed company. So listed company has to follow with.
Sachi, can we finish up the questions before you go to listed companies?
We can do so. I mean, otherwise it's not more.
Not more? Okay, then you finish it off and then we can complete.
Sakshi, it is better, let us take the questions related to Companies Act first.
Sure.
So that you go to a listed company. So otherwise it will become monotony also,
Sure.
Okay. If a non-executive director undertake to sign checks regularly or occasionally, would it be in line with the law? And would it continue to be considered as a non-executive as they hold the operation of the bank accounts? He virtually controls the company by controlling funds of the company.
What is the question, Bala? Sorry, I couldn't understand that.
If the non-executive director undertake to sign checks regularly or occasionally, would it be in line with the law? That is number question. And would it continue to be considered as the non-executive director? Question number 2. By holding the operation of the bank account for virtually he controls the companies and controlling funds of the company.
By merely signing a check, a person will not become an executive director. Sometimes, it may so happen that the company is having only one executive director and the company might have authorized another non-executive director to sign the checks in the absence of the executive director. That doesn't mean he will become an executive director. But at the same point of time, I would like to also say that don't authorize an independent director to sign the checks. Then it may affect his independence.
In case of a public limited company also, there is a wholly owned subsidiary. All the directors are appointed as the director only and not termed as the ED or WTD. But now all the directors take care of the day-to-day affairs of the company. Does the directors be continued to the ED or whether section 197 applies?
There is no deeming provision, according to me, that directors will become executive directors. I have not seen any sort of a thing in the Companies Act as such. So I don't think that an executive director is not there. The entire board may be responsible. That responsibility may be there. That is a different thing for any kind of act or non-act, whatever it is. But they will not become executive directors because of something and all, and the other sections not applicable to them as executive directors. That is, deeming provision is not there.
In the definition of remuneration, is the remuneration that is in the whole time employment of the company. So it should be covered in the remuneration paid to the NED and IDs. In the definition of the remuneration section, it is mentioned that in the whole time employment of the company. So you should not cover the remuneration paid to the NED and IDs.
So, sir, can you again repeat, sir, what is the main crux of this? Actually, I'm not getting.
He says,
yeah,
in the definition of the remuneration, it is mentioned apostrophe in the whole time of the employment of the company, apostrophe ends. So you should not cover the remuneration paid to the NED and the IDs.
So it basically, since remuneration definition mentioned in the whole time employment of the company.
No, so
whether remuneration paid to NED and ID is not included in remuneration.
This commission,
no. So actually, actually, in the definition of remuneration, it says that any other perks also as per the IT Act and whole-time employment. So that it's a reference like is given. But whatever this mentioned that whatever amount is given or passed to the any person, including the employment or non-whole-time employment, right? Whatever amount or equivalent has been given to any person, including the directors, would be remuneration. So there is no ambiguity about that. It's that it's only for the whole-time employment and it's not for the others. So definitely it's for the others also the same remuneration definition will be there.
Kindly give an example of money passed.
These questions are there in the chat box?
Yes, it is there.
What is the time that the question you are reading?
This is 11:27.
11:29. 11:29.
Okay, anyway, I joined late. That's why those questions are not there in my chat box. Okay. I was wondering actually why the questions are not. I joined late,
Yeah.
After 11:33, I have the questions.
Acha, it is at 11:29.
Yeah. Okay.
Kindly give an example of money passed.
Money?
Past. We are telling in the definition what is remuneration, even money given or money passed. So I give the explanation what is money passed means even though you have not directly given to the directors, but they have received it, then it is remuneration to directors. So they are telling what is the money passed. Give the example where it is indirectly.
Indirect.
Can there be a more than an MD in an organization? I think our panelists already answered. You can have more MD.
Yes.
That
we can have more than one MD, but we cannot have more than one manager and not MD and manager. But definitely we can have more than one MD. There is no issue.
Dear host, can you please?
In fact, I don't know whether this was discussed or not. Actually, several company secretaries with all due regard, they doesn't know the difference between a manager and managing director. Who is superior, manager or managing director?
Actually, sir, yes, it was discussed. Actually, the main difference is that like the manager has the substantially whole of the affairs of the company. Where in the case of MD, it's a substantial power of management, sir.
Second thing is the manager derives the power from the act.
Yes.
Whereas the managing director doesn't derive the power from the act as such. He has to be delegated the power by the articles or by the appointment, True, so manager is always superior to managing director. That's why you can have 2 managing directors or 5 managing directors, but you cannot have 2 managers even. You have to have only one manager. Manager is always superior. But unfortunately, these days, if you write yourself as a manager, the people may think that you are a junior person.
Yeah.
Very true,
So
sir.
nobody accepts the designation now. Only thing is, but in Reliance, we used to use this thing because sometimes what happens is for some companies we want to appoint under the old act, I'm talking about, not under the new act. So you cannot give the managing director designation, and okay, because for whatever the reasons it is that the HR is not very much interested in giving the managing director designation. But under the act we require. So what we used to do was we used to give the manager designation. So manager, nobody bothers, given the person. Otherwise, what will happen is that we will create a rift. And the moment you say that I am the managing director, then so that manager was to come to our rescue at that point of time. Now, of course, you have the CEO or whatever it is and all those things.
Sudhakar, by saying the manager, I am actually taken back about 45 years back. I was working in a Jammu and Kashmir those days. In fact, I was actually designated as a works accountant. That means, the in charge of the finance function in that Jammu factory where I was actually working. We had a person working with him as a senior accounts officer. Both of us went to meet some government official in J&K. When we went to meet, I sent my card. He also sent his card. Both of them have come. He immediately told to send the senior accounts officer, not the accountant, works accountant. Because we recognize senior accounts officer as the superior person. So I will meet only to him. This is what it has actually happened there. Yeah. Let us go to the next question. Please explain the first proviso of section 203 subsection 1, which reads, provided that an individual should not be appointed as reappointed as the chairperson of the company in pursuance of the articles of the company, as well as the managing director or chief executive officer of the company, or at the time after the date of commencement of this act, unless the article of such company provides otherwise, or the company does not carry multiple businesses.
About 203.
I will just repeat again. Please explain first proviso to section 2031, which reads as, provided that an individual shall not be appointed or reappointed as the chairperson of the company in pursuance of the articles of the company, as well as the managing director or CEO of the company at the same time after the date of commencement of this act, unless the article of such company provide otherwise, or the company does not carry multiple businesses.
So can I tell you about this? So actually, this has come out, and again, I think the SEBI also, this was the limelight that chairman and MD positions should be different, right? The same person should not be chairperson of the company as well as having the MD because of the wide diversified business operations of the company and the many branches, some subsidiaries, etc. Now, what it says that if your articles permit side provides something otherwise, right? Or the company does not have multiple businesses, like if only one businesses, only then in those situations you can have the chairman as well as the MD. Otherwise, both these positions, like your executive position as well as your chairmanship position, should be different. So this is we going in that direction basically. Yes, sir.
I agree with you.
Your view, sir.
So basically, if you have multiple business, you can
Yes.
have a different position. But means, and if it is not carrying, it's a basically combination of chairperson and executive position that they are telling you should not.
If the MD is above 70 and still continuing, what are the implications?
Non-compliance will take later. Sakshi, you have taken a slide for non-compliance.
I think non-compliance is coming later, I think so.
Yeah,
Yes.
in presentation.
Anyway, it will be a non-compliance action will be taken by the adjudication officer because the law very clearly said if it is above the age of 70, you need the approval, special resolution approval from the shareholders of the company. Okay. When will be the MR1 should be filed from board approval date or shareholder approval date?
I think it's board approval date one. It's 196. No, it's for subsection 4. I think it's about related with the board approval, in my view.
I think if I am not wrong, if I remember it vague memory, that the form will not be accepted from the board appointed date. It is shareholders appointed date only.
Okay.
We'll come, or otherwise we'll come back. Give us some time for this.
Yeah.
Yes, Sakshi, take. Sorry, Mr. Bala, take next.
Yeah. Would you
Because there is
please
an
clarify?
attachment also. Yeah, sorry. Yes, please.
Yeah.
would you please clarify that in the case of the unlisted public companies, the individual
What is
was
the time
appointed.
now, Bala? This query you are reading, what is the time?
Which one? This one?
Ah,
MR1.
yeah,
MR1. Yeah, MR1 is
11:29. 11:29.
11:31.
11:31.
No,
Yes.
no, no. 11:20.
No, 11:31
But I
only
have
the
the
question is
questions. I
appearing.
have the questions after 11:33. That's what I was
No,
thinking.
no. Still lot of 5-6 questions are
It
pending.
is actually from Sumit Jain. The
No,
time shown
no.
in my
Mr.
is
Bala, go ahead. Still time is there. His question.
maybe your time is different, my time is different.
Yeah.
Yeah.
These questions are pending. Yeah.
Would you please clarify that in case of the unlisted public companies, individual is appointed as an additional director and designated as the MD. Later on, in the general meetings, regularization was actually done from additional director to the director and to continue as the MD from the board meeting. He continues as the MD from the board meeting date only. So that means how much from DR 12 we required to be filed in both the cases. The question is very simple. If he is appointed additional director, you find the DR 12. The moment he is appointed the director, you only change the designation. That is all. The change of designation, you are filing a file. You are not filing a two different DR. The same DR 12, you are filed one DR, it is horse good. The second time, you only file for the change of the designation. That's all, as simple as that. Can MD take remuneration from both the holding and company? I think this we discussed elaborately. Can the remuneration of the managing director be zero?
Yes.
Can
Why
the
not?
remuneration?
Why
I
not?
think there is no concern. Yeah.
Please discuss what should be considered in inadequacy profit. How should be referred to the limits under Schedule 5? Inadequacy profits in the.
So basically the question is when you consider, this is a common question raised, that how we come to know the profit is inadequate. See, the
Right.
remuneration of director is fixed. It's not that every year you give different.
Yes.
So when you give that and your profit is inadequate to give that, so it's crossing the limit.
True.
Yeah, you are absolutely right. If the
Yeah,
if the
yes,
remuneration is already fixed, the total of the remuneration, what is actually paid or payable in a particular month, whether that falls within that 10% limit or not, that is what you have to check it. If it is exceeding the 10% limit, definitely you are not having an adequate profit to meet that requirement. It is very simple actually. I don't know.
Very true. Like, sir, in section 196, subsection 4, where we have to file that MR1, we have to give the terms and conditions, including the remuneration. So suppose we are appointing a person for 5 years, so we'll approve that 5 years time, right? Suppose after 2 years, the company is not having adequate profit. So that situation will be inadequate profit because we already approved the terms of remuneration.
See, that's why what we do is when you are passing the managerial remuneration initially, we also address this issue in case of inadequate profits that you can pay the remuneration as per Schedule 5. So that you
Yes,
don't need to go back to the shareholders again. Suppose if you are not
true,
addressed that issue at that point of time, you have to go back to the shareholders again.
very true, sir.
Some clarification on what is 10%, 11%. I think she has already explained the slide. That 10% is applicable to the whole-time director. She said very clearly, if there is one whole-time director, it is 5% limit. If it is more than one, then all put together, it is a 10%. Then non-executive directors, whatever is paid, that is falling in 1%. That's what she put up a slide. Here she is putting up a slide once again.
And sir, interestingly, suppose our company passes special resolution in the general meeting. So even then they can exceed this limit. So there is no issue at all, right? Because there is no central government approval, which was earlier there.
Yeah, that is what I said actually. In many companies, when we especially employ the overseas people, expatriate, because the expatriate is coming all the way from here in a specific terms agreed for the 5 years. If something goes wrong in that, it is actually not within their limit, it is beyond. Because they cannot survive by reducing the limits in the circumstances, etc., and other thing and all. So normally, what we put is in case of the inadequacy of the profit, etc., and all this thing, this remuneration will be treated as a minimum remuneration. That is what we actually put up. If you take the shareholders' approval to that or your appointment only, this problem is sorted out. Yeah.
See, if you see the whole purpose of this sort of 197 as well as your Schedule 5, the objective is that the executive directors should not corner maximum remuneration to themselves only. So that's why these limits are there. At the same point of time, it actually practically saying that ease of doing business, whatever we may call it as, the Companies Act 2013 has liberated to a large extent, and they said that beyond limits, if you want to pay, go to your shareholders and then you pay it. Similarly, if you see Schedule 5 also, though there are that minimum remuneration is there, beyond that also, if you want to pay, you can take the shareholders' approval by way of a special resolution and you can pay that also. See, the reason being now that if you don't pay because of the inadequate profits for whatever the reasons it is, there is a financial stress is there on the company and you don't pay to the managing director or executive director, they will leave the company and go somewhere else. Then who will run the company? So that's why they are given the power to the shareholder that even if there is a inadequate profits or there are losses are there, that whatever the slabs are there, beyond that, if even if the company wants to give it so that they can retain the good people, yes, go back to the shareholders, let the shareholders understand the reason. In the explanatory statement, you have to explain the reasons why you want to pay that, and they will approve it. And we have also seen in the recent past that several promoters they want to give huge remunerations to them. When they go to the shareholders, they have not approved that. They have rejected that proposals. That also is there.
Yeah, where it is there. In fact, there is a prominent case was there in each motor when
Yeah,
the higher
GTV.
remuneration was actually put up. It was defeated by the majority of the shareholders. Actually, they have
Yeah,
to
there are four,
recommit to
five
the
companies are
remuneration.
there. Even GTV case is there, if I am not wrong.
Correct. Absolutely right. Ekta
Yeah.
Kapoor and her
Yeah,
friend.
Balaji Telefilms, Eicher
Yeah.
Motors, I think, if I have one more company like
Yeah,
that.
that is right. Is there any cooling period of the appointment of the MD, whether he can be reappointed every time after expiry of his tenure?
See,
Yes.
cooling period is there only for independent directors after his the terms of 2 terms of 5 years each, if he has done it, even 1 year, 1 term also. If the independent director is to be appointed as an executive director, then there is a cooling period of 1 year. Otherwise, there is no cooling period as such.
Can a company appoint a person as an executive director only, or he has to be a whole-time director? As per the company's specification definition details rules 2014, executive director means whole-time director as defined in the clause 94 of section 2 of the Companies Act. I think executive director, the whole-time director is one and the same.
Yes,
There
it
is
is
no
defined,
difference
sir.
between
It is defined as rightly pointed out. It is defined in the rules itself that executive directors means a whole-time director, and whole-time director is again defined as the 2 sub clause 94 of the Companies Act. So both are it has to be.
where the appointment require approval of the members by the special resolution. When should company file MR1? Is it after passing the board resolution recommending appointment or approval by members, or after passing the special resolution?
Actually, sir, 196, that proviso says that within 60 days from the date of appointment, right? And what the 196 says, the board will appoint, which will be subject to approval of the members in the ensuing general meeting, right? Now, only the when where we are going to file that form, suppose as Sudhakar sir mentioned, if that form allows you to file that from the date of board meeting, it has to be. However, if the situation doesn't allow for any reason, then the general meeting, otherwise the law is very clear that it has to be approved by the board. It is not recommendation, it's approved by the board. Then ensuing general meeting, it has to be confirmed, right? Just like additional directors. And then the law says within 60 days from the date of appointment. Now it doesn't say about the board or general meeting. So in my view, if the board meetings permits or that form permits, then we have to file within 60 days from the board meeting itself. And the return also had to be attached from the CS or the PCS, stating that the Schedule 5 requirement has been complied with.
Yeah, according to me also, the appointment is actually originally the date on which he is appointed. Either it is the board or the shareholder, whatever it is, that is the date. That is what. Because even if you file the DR12 form additional director, is the date of appointment is the board appointment when he is the additional director. When
Yes.
he is appointed regularly as a director, only we change the designation, but appointment is stands from the right from the day one he is appointed actually. Sir, usually companies have the increment cycle April to March. In such a cases, if the limit exceed, can the general meeting of the ordinary resolution be passed with a retrospective effect? Usually, companies have the increment cycle April to March. In such a cases, if the limit exceed, can the general meeting of the ordinary resolution be passed with a retrospective effect?
So retrospective effect can't be passed, but however, if it increases that limit, right, it is suppose normally that Sudhakar sir mentioned, so normally the resolutions are drafted in a way that there is upper cap that is 11%, 5%, right? And second, they're subject to Schedule 5. However, if you specified some amount which is crossing, then we have to take the approval in the general meeting, because otherwise it will be excess remuneration. So we have to take the approval. It's not like from the previous one, but we have to get the approval before giving that remuneration.
For the private limited company,
Just 1 minute. As far as remuneration is concerned, shareholders' approval is concerned, but it need not be. When you are making the payment of remuneration, That time, subsequently, you can take the approval of the shareholders. If suppose shareholders have rejected that proposal, then you will recover that amount. So sometimes it may so happen, you cannot tell the managing director, who are the executive directors, by we will take shareholders approval, then only we will make you the payment. So it is not so. You can continue to make the payment. And then if the shareholders approve it, fine enough. If the shareholders reject that proposal, they are not approved that thing, then you have to recover whatever the amount you have paid, you have to recover from that executive director.
Okay, yes, there is a waiver concept also. Yes.
Yeah,
Perfect.
if the shareholders waiver
Yeah.
means, okay, that is again the different thing. If they approve it, it's fine. Otherwise, they have to, whatever you suppose, if you have to say that in the resolution itself, you have to say that so far we have, say, for example, shareholders have rejected the proposal, okay? But you have already paid some amount to him. In that resolution itself, you can also provide that in case shareholders are not approving the increment, whatever it is and all, at least whatever so far it has been paid, they can waive it off, the recovery. In future, they will pay lesser remuneration. That possibility is also there. So whenever you are approaching the shareholders for approvals, you have to have a comprehensive resolution you have to pass, anticipating all these things. Otherwise, what happens is repeatedly you have to go to the shareholders, which is a costly affair.
So, Sudhakar, I also will agree. The retrospective appointment cannot take place, but the
Yeah.
retrospective remuneration can be paid. That is there. For a private company, as per the Companies Act, Section 197 is not applicable. Still, under Income Tax Act, clause of 11% is applicable. It seems any clarity on this?
So as I think Sudhakar sir already mentioned that section 197(1) is because that's a limit, specifically says about the public limited company, right? So that is not applicable. But however, when it comes to the subsection 3, right? Because yes, there are different two schools of thought, but subsection 3 says in case of inadequacy of profit, there will be different situations, right? So inadequacy of profit, one had to take a call that whether he is going to pay the remuneration in excess of that limits and may be susceptible to future repercussions from the authority, or he will take a conscious call to limit the remuneration only to the Schedule 5. So this is yes, different school of thought that one has to take a call accordingly.
Terms of remuneration for managerial person for a loss-making company, I think she has already put a slide, Schedule 5, she has actually categorically given, depending upon the effective capital of the company, what is the things she has put already. In a private limited company, is it now converted into a public limited company and the directors are taking salary more than 11% salary from the previous year too? What compliance is to be done now?
So as sir already mentioned about the approval of shareholders, right? I think with regard to retrospective remuneration, because it's a conversion, now one has to approach to the shareholders and take the approval like under section 197, either in the limit or beyond the limit with a special resolution that 5%, 11% limit. I think the immediate requirement would be to take the confirmation in the shareholders meeting.
I am working in a bank and I can understand MD and WTD, but who will be regarded as a manager?
I think it has been discussed in detail, right, in the past. So with regard to powers of management.
Profits are based on standalone or consolidated. It is always standalone. It is not consolidated.
No doubt, no doubt. Consolidation is a presentation only. It's only a presentation from the accounting standard and from the shareholders' perspective. Consolidation is not never for the purpose of calculation of limits.
As the managing director working for the entire group, can we take consolidated profits?
No.
In 197 subsection 1, it is provided that except that the remuneration of the director shall not be deducted from the gross profits. It is exception of the limit. If we do not deduct the remuneration from the gross profit, then the company is allowed to give any amount. And the company is also not allowed to get deducted from the income tax.
I think with regard to profit, it's very, very clear that only the net profit has to be calculated as per section 198, right? So whenever you are paying or considering the limit, it's the calculation very, very clear. Like for the 135, 197, both sections, 198 calculation will be there, sir.
How no profits or inadequate section are to be interpreted. For example, if the company is actually earned a profit of rupees 55 lakhs in terms of section 197, 198, can the company pay remuneration of rupees 60 lakh rupees with ordinary resolution considering the profit to be inadequate?
This thing in this question, again, I'm not able to say that.
1135.
It's 1135. Okay.
1135, it is actually Hardik Patel. Hardik Patel.
I will repeat it. How no profits or inadequate profits are to be interpreted. For example, if the company has earned profit of rupees 55 lakhs in terms of section 197 of the company, can company pay remuneration of rupees 60 lakhs with ordinary resolution considering the profits to be inadequate?
See, that there is no profit, we know that. That means the company is having a loss, right? Second thing is inadequate profit means what? Suppose you have to pay to the managing director, whoever the director it is, you have to pay suppose 60 lakh rupees per year. And when you are arriving at the profits under 198, you are getting only 40 lakhs. So that means inadequate. No? You cannot make him that the 60 lakh rupees because you don't have the profit. That is called as inadequate profit.
Yes. So Schedule 5 will come into the picture.
Correct. Yeah.
So basically, if you have fixed some remuneration and your for your MD, and when you calculate the profit as per the Companies Act, and you arrive at the profit available, if that you count, it does not adequate to pay the remuneration already fixed, it is inadequate profit.
Yes, true, true.
In simple language, if we mention that.
Absolutely correct. What you are saying is actually correct.
You have a lot of questions. If it now I could make that where exactly you are. You have another 30, 40 questions are there, and you have 40 minutes time. And I think that Disha, sorry, Sakshi has about 3, 4 slides also.
Listed companies, yeah, listed companies slides.
On listing. So now you have to just, whatever the questions, Bala, we have already answered, just skip them through.
Okay. As mentioned, the total remuneration exceeds 11% of the shareholder, then the CFO subject to the schedule, etc. This, I think we discussed about it in Schedule 5. Please, additional inadequate profit, that also we talked about it. In case of the only MD, limit is 1% or 3% or NED. No, there is no question of 1% or 3%. If the MD is appearing, it is a whole-time director, 5% will apply. So effectively, the company has currently only an executive because the total remuneration is only 6%. Not 6%, 5%. It's not the 1%, 1% to NEDs. Yeah, that is right. A private limited company has now converted. This we talked about it actually. What is the compliance is correct? Would the director who will be responsible to act on the neglect become liable and not for all the directors? Yes, of course. If it is a person's negligence is there, if it is identified, yes, he become liable for that. A CEO needs to be member of the board. CEO need not be a member of the board. That we discuss elaborately. Manager, CEO, whatever it is, need not be a member of the board. When the board responds to the additional director and the designate him MD, this also I think we discussed board appointment and the shareholders appointment that we talked about it. For promoter MD, remuneration listed companies, audit committee approval required as a related party transaction.
Listed company will take later.
Anyway, it is a related party transaction. See, the promoter MD remuneration, it is a related party transaction. Definitely, promoter is a related party.
Whether the retirement the MD after 5 years also applicable to the private limited company.
Yes, it is.
Yes, it is applicable.
So
because the appointment per se section is applicable to the private company. Actually, yes. That is the thing.
Yes, sir.
Okay.
Inadequate profit is continuously questioned.
So just to add on, sir, with regard to RPT, sir, there will be some instances, sir, where the person will be appointed on the place of profit, office or place of profit, right? So sometimes these type of compliances are missed in many companies, right? Because it is like applicable to subsidiary and associate companies also, right? So sometimes if we are appointing a person as a managerial person, right, we have to observe the compliances from the RPT angle also, whether that appointment under section 186 and 7 is also subject to 188, that clause of requirement, that whether we are taking the necessary approval for the office or place of profit also.
As I understand, private company need not have the managing director. The requirement of the KMP also does not arise to be applicable to the closely held company. In this case, can the director will be held liable for the irregularities and the conduct. If they are not there, all the directors will be held responsible collectively. That is what it will happen actually. The law says very clearly who are the officers in default. Please go through section 2. Whatever the amount is being paid to the director, whether commission or otherwise, everything will be covered under the limit of remuneration. Of course, it is. That is what is money and money passed on.
Only sitting fees are excluded from the calculation. Otherwise, everything will be remuneration, sir.
In subsection 3 of section 197, reference of inadequate profit given, which will be read in the communication subsection 1 and 2, in my view, it will be applicable to only to the public company. That is what he said, that the two school of thought, whatever it is, he already explained this in this. What is the treatment of the impairment of the investment of the subsidiary? Do we need to reduce the profits and calculate profits of the managerial remuneration calculation or not?
See, better read section 198 thoroughly and then take the action. Don't depend upon this question in the webinar like this.
For the purpose of calculation of the profit, is the expected credit loss allowed as deduction?
Expected.
Same answer to that above question whatever I have given.
Is it possible to approve remuneration one of the MD or 5% the net profit, and for the another W2D remuneration approved as per the Schedule 5 eradicates the profit? Yeah, within the 10% any remuneration you can have the variance 5%, 2%, 3%, 5%, 1%. All those things you can actually do. In fact, in olden days, people used to have only one managing director. They wanted to pay more salary. What they used to do, they used to appoint a company secretary also as a director, and whose salary is fixed at a 9%, so that the other person gets a 9%. That also I have seen in some of the companies. Within, you can have the what you call combinations. Section 198 will be used to calculate the profit for the calculation of the managerial remuneration. At the same time, it allows director remuneration as a deduction. How does it work? Section 198 will be used for calculation of the.
There is a deduction of director's remuneration. Reason being because it's the expenditure would be like it would be if they're calculating the profit, so they are disallowing the expenditures which is not attributable to the director's operations, right? So they are considering that director's remuneration is going to be paid. So that's why if there is any deduction, they will carve out from there and they will calculate the other amount, right? So there is a
MD salary
deductions.
I think MD salary can be. Yeah, MD salary can be zero. That I think we discussed. Yes, it can be. In case of the NPS, in case of the NPFCs, if some bad debts are provided for, whether that amount should be included for the net profits or not.
Okay, the same answer, 198, you read it thoroughly and then take the call.
Then again, the next question is impairment of the loss.
Same thing.
Should CSR expenses be disallowed for arriving the NP for the managerial remuneration?
Same thing.
What is the meaning of inadequate profit? We talked about how adequacy profit decided, that also we talked about it. Please throw some clarity on 2A. I don't know what is this 2A. Oh, in part 2, schedule 5, can another company pay the excess remuneration? How it is calculated? I think he talked about the remuneration can be drawn from the two companies, but either of the company that subject to the 10% limit. That is what he said actually initially. Can MD and WTD receive remuneration from the two independent entities?
Yes, they can draw it. They can draw it, but also, again, the same thing. Limits will be applicable. They can draw the remuneration. The companies which are paying that, they have to ensure that is within the limits. If the limits are crossing, you have to go to the shareholders and get the approval.
Can a person be MD and WTD of two more companies?
Yeah, 203 refer to.
Okay. Calculation method is effective capital. That you'll have to go through it, effective capital method. That we are not discussing it here. Can the remuneration of the managing director zero? Again, the same question is repeated. Schedule 5 limits that are Schedule 5 remuneration apply to private limit company or not? I think she has already explained. Please explain the concept of the effective capital. That also, yes, thing we discussed. Whether the monthly remuneration can be paid to the non-executive director.
Yes, it can be.
It can be.
In terms of the section 197.1, the profit-making company with the special register of the shareholder can pay the total managerial remuneration exceeding 5% of the 1% and more 11% or more managing person, if that understanding is correct. Absolutely correct. You can actually pay. Can the managerial remuneration be paid by the
journal entry and not payment through bank?
I hope journal entry means payable it is.
We don't know. You have to pay, that we say.
No. Can managerial remuneration be paid by a journal entry means what? Journal entry is without affecting the cash flow, right? If that is the case, that means managerial remuneration account debit, managerial remuneration payable account credit. That is journal entry. Yes, it can be done. That means you don't have the liquidity now to pay the salary to him. You are creating a provision for that. And as and when you have the liquidity, you will make the payment. If the MD is ready to that, okay, you do it.
Okay, how no profits, inadequate profits are example for this. I think we discussed actually the 55 lakh rupees, 60 lakh rupees, and all those things. Have no profits, inadequate persons are to be interpreted. For example, if the company has effective capital of 4.5 crores.
We discussed it now. Why again we are coming?
Okay. Can a company appoint executive director only to the whole-time director? This also we talked about it. Does the managerial remuneration be exposed or included in the managerial? Does managerial remuneration of expenditure,
Reimbursement of expenses, they are asking him.
reimbursement of expenditure,
No, it is
reimbursement of
not.
expenditure? It is not forming part of the salary.
Basically
It is
mentioned
actually incidental to the business expenditure you are actually paying, because instead of you spending, he spending, you are reimbursing to him.
yeah, it's clear. Next, we'll take.
Yeah. In case of the limit 1%, this I thought the limit we talked about it. How and when the profits are considered inadequate, that also we talked about it. With respect to the inadequacy of the profit, say a company has cut, again the same question. Yeah. Manager is superior, you talk about it. I think both similar case depends on how the structure of the agreement. Okay. Does the compounding of ROC offences above ₹1,000 amount to fine disqualifying you as a managing director?
No, it won't be, because it is only a penalty. ROC cannot impose fine. Fine is to be imposed by a judicial authority. And ROC is not a judicial authority. He is not even a quasi-judicial authority. He is doing only compounding. Okay.
Which year of the net profit taken for the assessment of the remuneration? Kindly give example. Same year to year basis, you have to calculate. If we go through the balance sheet, there is a schedule computation of the management remuneration. Schedule is actually appearing.
So just to add on, sir, one point with regard to that insurance, like directors or officers liability. Suppose the DNO insurance has been taken, the premium has been paid. If there is any default and the directors has been like convicted or has been fined or has been like it's a breach, right? Then the amount of insurance paid would be treated as the managerial remuneration, right? So that is the interesting part in Monetary 7, that they will treat only the event that has been actually levied and that has the insurance attributable to the director's default. Then it's a remuneration. Otherwise, fines, etc., is something different. Yes.
Next question is having a more than one managing director, 3 managing director, and all we discussed about it. Can a person be a managing director, manager for more than one company? That we talked about it. Final approval is given the shareholder appointment, the MR1 also we talked about it. Final approval, okay.
Ashwini, ये webinar.
With respect to NRI status, what is WTD exceed 182 days in abroad or business purposes? Do we need to take the CG approval in mid his return when he becomes NRI?
So yes, I think schedule governs that, right? Because the residential requirement. Can you?
This is actually this is a resident director. If I'm not mistaken, he is talking about the resident director. Resident director means he necessarily has to be 180 days. If he's
Resident
not in
director is
100,
different, executive director is different here. There can be 2 people now. The resident director may be a different person. See, the company has to have only one resident director. When you have that resident director, the other executive directors can be NRIs also, no problem.
Yes.
I think probably this NRI status is more to do with the income tax rather than the company sector. That is what I think so.
No, sir. NRI status will come in schedule 5 basically with regard to the appointment of managerial.
Yeah, that is right. Appointment only. That is right.
Yes.
Sitting fees professional. Yes, she already said sitting fees is actually exempted and that doesn't form part of it. Schedule 5 is only for ED, WTT or even for NED's remuneration. Yeah, it is 1%, that 11% overall it is covers everything.
And sir, even after 2020 amendments, it includes for the IDs and NEDs also.
Correct.
That's schedule 5.
If we pass the special remuneration at the time of the appointment, approved of the remuneration appointment for 3 years, also approved by NRC, voluntarily, do we comply with the compliance of Schedule 5 whether inadequacy question arises? No, inadequacy you have to see. So long as inadequacy situation arises, then you have to address it according to Schedule 5. In shareholder register, do we need to provide disclosure given the Schedule 5 in case of the inadequacy for the... Yeah, Sudhakar has addressed this question actually. In your slide, first post says limit of managerial remuneration 11%, and in the last point says remuneration should not exceed 10%. Please clarify. I think you are mistaken. She has already put very clearly 10% is a managerial remuneration for the directors, whole-time directors, and 1% is for the non-whole-time director. That is what the distinction. That is why the 10%, 11% limit applies. In appointment, reappointment of the MD, approving the remuneration is RPT under Companies Act 2013 and LODR.
Time of his appointment, it is not an RPT, because only after his appointment, he becomes a director, becomes a related party. So first time appointment, it is not a related party transaction. After his appointment, anything happens, it is a related party transfer.
I think cooling period, we talked about it. And the independent directors, in a public limited company, an independent director was appointed as follows: first term 5 years, second term 3 years period. The company now so want to revise his tenure for the second through 2 more years before the expiry of the second term. Is it permissible under the Companies Act 2013?
I think there is no problem in this. You told that comes only in case of independent director that the issue is there, but for the managing directors and all, there is no problem.
Can we pay monthly remuneration to the non-executive? Yes, you said it is. It can be. A profit, a private company appointment of the MD voluntary adoption section 196, 197, 283 for a period of 5 years. Later on, the company converted the public limited company. Whether the company needs to take a fresh approval for the payment of remuneration and appointment.
No, because for fresh remuneration section 4 and 5 are exempted from 196. So once the terms has already been approved, I think in my view there is no need to take the fresh approval.
Any time limit defined in the shareholder approval in case of the listed company, that is 3 months later from the board approval?
Listed company, it will come, but I think the 3 months time is given.
An MD in the private company was appointed as a MD for
Life.
life.
Life it may be.
For
I
life.
don't. Maybe life it may be.
No.
Does he occur reappointment every 5 years, which is the norms in the Companies Act 2030?
Sir, it
Yeah,
is
it
mandatory.
is.
So 196 is mandatory, sir. 1 to 3.
If the appointment of the person above 70 years required consent of the members of the special resolution, can the appointment be effective from the board meeting date passed earlier? Yeah, it is subject to approval of the shareholder. That is the way the resolution is normally worded. We take the approval from the shareholders.
See, at the time of appointment, if he is less than 70 years, it is advisable to have it that in the
Yes.
resolution itself, you can say here, once he crosses 70th also, he can continue to. If we are not having that kind of a resolution, then when he attained the age of 70 years, again, you have to go back to the shareholders.
If a deemed public company pays remuneration to the NED, what points should be considered?
There are many things.
Everything as if it is a public company, that's
Yes.
it.
Yes.
The board and shareholder approval taken for the appointment of Mr. X as a CMD and Mr. Y as a JMD. Now it is proposed change the designations, executive chairman and MD respectively with any change in the remuneration. Will it again need to the approval by the shareholders, the company in a listed entity? The board and shareholders approval taken for appointment of Mr. X as CMD and Mr. Y as JMD. Now it is proposed to change their designation to executive chairman and MD respectively without any change in the remuneration.
This designation is only for internal purpose. Under the act, there is no change at all. Executive
Designation
chairman and
change.
chairman, there is
Yes.
no this thing.
Designation change can be done by the board
Yeah.
because designation is one among the directors are actually selected what he can be. It doesn't call for the
Yeah, once the
shareholder
terms
approval.
is approved, there is no change in terms there. I think there is no change approval for the shareholders again.
Compounding of offenses, we talked about it. One MD, can ND get 3? There is one ND limit 5%. Can NED get 3%? No, if already a whole-time director is there, it cannot exceed more than 1%. It is only 1%.
Correct.
If no whole-time directors are there, then only it is 3%. That is very clear. Actually, Act is very clear. A CEO is also an executive director. Will he consider for calculating limits?
I think it is 1 o'clock here. It is so many questions. I think another
Yes, sir.
60 questions are there if I am not wrong.
88 questions.
88. Oh.
Yes. I think we will ask Sakshi to complete the remaining
No.
substance.
See, there is no point, there is no point. What, Deepthi, why can't we have this webinar continue for next week also?
But will we justify because these questions are only
See,
there?
because 80 questions are there and 4-5 slides are there, and that 4-5 slides of listing regulations is very important.
Then
So
we can do it.
now we should not push it through, just at least, that's what I feel personally.
Okay. Then maybe next Saturday, Sakshi will continue the same presentation. And we will close here or what to do? What you
Mr. Tripathi, you are available next week?
Sir, I check next week is just I check my availability suggest next week.
No issue. No issue.
Okay, no problem.
Sir, I will check actually next week availability.
If that is there, Sudhakar, my question is, we will stop here or we'll attend the question till 1:30?
No, we'll stop here. We'll stop here.
No, we will stop here. We will
Because
take the
80
list.
questions, Deepthi, 80 questions, you cannot do that justice, Even if you extend for another half an hour also, you will not be able to do it. So at least you require another 1 hour minimum if you want to address the questions and the remaining portion. So that's why I'm proposing for adjournment of this webinar and then to next week.
Yeah, next week we can take the listed companies and the questions, whatever is there.
Correct.
Okay, so last question we have taken is
12:44.
question-
You just take that time and then you just. I
I
don't know
think-
how you will take up these questions in the next webinar. That you have to see Deepthi, the technicalities and all. Anyway, you are recording it, so there should not be a problem.
yeah.
I had come up to 12:47. Maybe
Yeah.
your watch may show 1 or 2 minutes here and there.
Yeah, and
The last question I had taken is actually Bhageshri Navle.
yeah.
Yeah.
And that question as regards whether the MR1 will be filed at the board meeting, AGM, it will be at, shareholders approval, it will be at shareholders approval. At board meeting, MGT 14 and DR 12. After shareholder approval, DR 12 and MR1. Okay, then we will close here, and next week we'll have the same topic, managerial remuneration, which is surprising. I thought that this topic is discussed quite a lot, but after long we have taken again the confusion. Same
No,
confusion.
Deepthi, see, there are, I always used to say, there are some, evergreen sections are there in Companies Act. Okay. And one of that is related party transactions. Even after 1 decade, okay, I have addressed at least 250 to 300 webinars, programs on 188 only. But still, wherever I go, hall is jam-packed, And as high as I announced 15 days before I did it, Hyderabad, same is the case there also. So there are some good sections. There were 185, 186, 188.
Yes.
I know all these sections are there like that. And the same is the case with 196, 197.
Deepthi, you see the number of participants at this particular time. It is 235.
Okay.
That is the thing. That shows the interest of this topic and the importance of the
Definitely,
topic.
it is an important topic. And so that's why I was actually advising that let us postpone it. I mean, have a sequel of this webinar to next week.
Sure.
Okay.
So if I'm available, so I'll definitely come back to you and I'll definitely.
No issue. In case of any difficulty, then we will try to bring someone else.
Ms. Rajkumar is telling listed company CS and CEO are awaiting listed company slides. We have no choice because see, it will be an injustice if we don't cover questions of the PP presentation we have already done. So I know it's sorry, but we have to take next week. And again in listed company, once the slides will start, the questions will be added.
Yes.
No, see that because the listed company also it is not like that. It is just like for the very complicated provisions are there also.
That's
even
why.
the proxy advisors are there, so even very, very difficult to actually finalize and determine the remuneration for listed companies.
Correct.
Please, sorry.
Very good. Okay.
Okay.
See you all next week. Thank you.
Thank you. Thank you.
Thanks a lot to
Mr.
everybody.
Prem Thank you.
Have a good weekend. Thank you very much, Prem Narayan.
Thank you,
Sakshi, you have to work again next week.
We definitely look forward to meeting you in the next week.
Sure. It's my pleasure, sir. My pleasure, sir. Okay, thank you, ma'am. Thank you, sir.
Thank you.
Thank you, Sakshi.
Thank you. Thanks a lot.